Okay, now all-time high, the ring is always nice, right?
Yeah.
I mean, all-time high, just say it again.
All-time highs.
Ring is always nice, right? You always enjoy it. Now, mathematically, when you look back and you would say, this is just a number, and it was a great day to track markets. But you have to understand that what has changed in the last 10 days and what will change in the near term. What has changed in last 15 days is this entire view which the markets took versus what they're taking now in terms of what the election verdict is. See, the only problem for the market in last 10-15 days was and is FI selling, which is a function of what view they've taken on emerging markets and which is a view what FIs have taken on election cycle. From first phase to second phase to third phase to fourth phase to fifth phase, the political commentary by political commentators seems to be endorsing what markets want to hear, which is that there is going to be continuity of the government and they will come back with a majority. That narrative was not such a strong narrative at the end of the second phase, and that made market nervous, and now that is reversing, which is leading to a bout of short covering. That's part one of the story. Part two of the story is that while we may like to look at apps, in Indian markets in isolation, let's not lose sight of what's happening in the world. The world is also at an all-time high. So you're not unique, you're not special. We like to think you're unique, you're special, but the fact is that you're catching up with what the global trends are. Nasdaq all-time high, S&P all-time high, European indices all-time high, Japan not far away from its all-time high. I think it touched a new high a couple of weeks ago. So you have a very strong drift which is there towards global markets. Within that, you had a local event which created some degree of nervousness. Then your market cap $5 trillion. Then your level of participation. So now the market positioning is such that the nervousness, the anxiety, the anxiousness is over. Now markets are approaching the event, which is an important event, 4th of June event, with not feather-light positions, with fairly high degree of commitment, and with an assumption that whatever you will here get on the political front is something what markets are prepared for.
But what after June 4th, Nikunj? Do you think it will mark the top and then it will be sideways again? Any thoughts there?
See, there is a good old saying on the stock market that you buy the rumor and sell the news. Now, what is the rumor in this case? Or what is the belief?
That the government is going to come back.
The current setup of continuity does not change. So if you bought stocks with that view, saying that, okay, I'm playing for the election, then maybe closer to election, a day on the election, a week after the election, this market may just top out in specific pockets, specific corporate groups, specific themes. It may just top out. Interestingly, I've never seen such a bipolar market. For the longest time, I've been tracking election cycles. FI shorts, DI long. So one end of the market is excited, another end of the market is deeply hedged or is very cautious. If markets like what they want to see, the long haul guys, which is typically FIs who count in terms of years, they will say 3-5 saal ke liye wapas aate hain. What will you buy for 3-5 years?
Large caps.
Large caps. That's where the comfort is. So you actually could have a reverse, which is that the obvious beneficiary may peak out, and the indirect beneficiaries, which you never thought would be the ones which would be direct beneficiaries, may actually start coming back.
Talking of beneficiaries, names like Adani Group stocks also 5-6% higher. Not that I'm saying they are direct beneficiaries. Market sense.
See, there are some obvious pockets where you know that markets continuity is something which will not change the pulse. That is the obvious trade. That is the easy trade. It may extend itself. But your scope of making money on that obvious trade is less now. That obvious trade we spoke about 10 days ago. That was the obvious trade which you should have bought when we say the last hurrah in the market is not over. Now is the inobvious part. The inobvious part is that where there is short positions in the market and where there is scope for greater delta if flows come back. And that I see in the large cap stocks which are FI dominated. I could be absolutely wrong. I'm purely putting facts on the table, and facts are pointing to the fact that the obvious trades may peak out, then obvious trades is where you will actually see greater amount of elevation.
If you like this video, then like, share and subscribe to ET Now.